Welcome everybody, this is FXPassion broadcasting you live on YouTube. Happy Friday, happy Friday. What's the time? Melbourne, 2 a.m. I'm sorry. Singapore, 11 p.m. Still in time for the webinar. Madrid, 4 p.m. New York, 10 a.m. London, England, 3 p.m. right? GMT. And Toronto, 10 a.m. Everybody, this is Forex trading for beginners. Our goal for you is to become consistently profitable. Minimum 3 months, knowing when, how and why you make and lose money. You should not be allowed to trade with real money until you reach the goal. What is the goal? To become consistently profitable. Minimum 3 months, no losing months in between. Okay? If you are not sure if you are ready as a trader, just give me a call. You have the Gmail, Skype and LinkedIn, okay? But if you want, I'm going to ask you. You should know when, how and why you make, and also when, how and why you lose money. If you are not going to listen to us, here is the risk disclaimer. Don't trade with money you cannot afford to lose, and the webinars are not investment advice. They are for educational purposes only. Your job is to question everything and don't be fooled after you understand and master all the things here, right? From January to December. This is for beginners, everybody, okay? Maybe you think, oh, I'm a professional after knowing and understanding this. No, you are not. You are a graduate, but you are far away from being a professional. So after you understand and master all these things, trading is still 80% emotional and only 20% technical. So in order to be successful trading, you need to have your mind, set of rules, and your heart, managing your emotions, right, in the right place. And remember, if being consistently profitable is difficult, you probably still have things to learn. And if your way is not working, why don't you try ours? Give it a try, everybody, okay? And remember, 90% of traders who makes it between the 3rd and the 5th year of learning. For additional coaching or training or just questions, here is the Gmail, Skype and LinkedIn contact, okay? So if you are profitable for 3 months, one after another, no losing months, and if you don't know, okay, if you are in a doubt, if you are ready to go on a live account, give me a call, write an email to me, no problem, because we are going to talk, okay? So that being said, let's move into the live markets. Today is Friday, so easy topic, how to trade resistance in a downtrend. Easy topic for today. Let's open NZD-CAD. NZD-CAD chart, right? No more counter trenders, no more counter trend trades, right? The past 2 days were difficult, right? Wednesday and Thursday were difficult to understand for most beginner traders. But why? Because we learned, or we showed you some different concepts, some new concepts, and it was difficult to understand, right? It's like we are telling you, oh, do this, do this, do this, don't do that. And in the one webinar we are telling you, oh, but you can do this too. And it's again the rules, right? Not against the rules, everybody. Okay, just a new concept. Okay, resistance in a downtrend. Well, this is an easy topic for the one who are with us from the beginning of the day, I mean the week. Okay, we are in a downtrend, right? And sometimes the market is playing around, but ultimately he's going to hit some level of resistance. And this is the downtrend line. Let's color code this in red, okay? And we have talked about yesterday, right? We received an email, can you show us passion, can you show us how to properly draw or find levels of support and resistance? And we said that you go from the right to the left, right, and you are building a set of stairs like this one, you know, find a low, go left, go up finding a low, go left, go up finding a low, and go left, right? This would be the set of stairs. So this is one. Let's color code this in red because it's resistance. And as you can see, the market most of the time, not always, but most of the time the market reacts at resistance levels like this one and like this one, right? Nothing special, nothing so difficult to understand, right? So resistance, resistance, and also this one here. Most likely, if you are going to find the previous trend, right? Okay, most likely also, so this was an uptrend, let's color this in green. So this level here reacted to some level of resistance, right? So resistance are the lows. So this is the resistance that the market reacted, right? If you want to analyze, and everybody, any currency pair and the resistance, just type in the chat box. Oh, Passion, I want to trade Euro CAD. Okay, just write this down, put in the chat box. I'm going to show you NZD CAD and then Euro CAD if you want, if you don't have others. Right? So this is how to find, the other way, yes, the other way is put a horizontal, okay, we're going to delete the set of stairs and we are going to draw horizontal lines, okay? You can use the one you prefer, no problem. So this is support, resistance levels number 1, and you draw resistance from down, you go from down to up, 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 you found next level of resistance, and again up, 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 next levels of resistance, okay? So see how even in theory it's quite interesting how the level of resistance, how the market reacts to the previous trends, right? And I had a conversation yesterday, everybody, about support and resistance with a trader, with a student trader, and this is the uptrend, right? And then in some point in time the market reverses, right? And it goes down. And the question was, oh, should I check or only these levels of resistance because we are here in a downtrend? And I said no. Oh, but in the book, I said okay. I said, of course you have different books from different traders, different teachers, gurus, whatever, but I'm telling you, all levels of resistance are important, okay, even from the previous uptrend, okay? Because sometimes the market isn't going to react to the most recent level of resistance, but is going to react to the resistance from the previous trend. Of course, this is just theory. I'm going to show you in the live market in just a second, okay? So this resistance here should react, the market should react to this resistance right here, right? I'm going to color code this in black. Okay, this resistance quadrant should react to the black arrow, to the resistance from the black arrow up here. But it didn't. Why not? Because the market found resistance level from the previous trend. Okay, so even though you have different teachers and books, you know, and courses, and the majority of them I know because I read books a lot and I've been through some courses, about 20, and the majority of them are telling you no, this is not important, and Not all levels, not all highs and lows are levels of support and resistance. I'm telling you, you need to consider, from my experience of course, you need to consider all of them. Okay? When it's time to trade, you can project your strategy, you can find the future level of resistance, but you should address everything, and I'm going to show you right now. So NZD CAD daily chart, right? NZD CAD daily chart, and let's say that we are here. Okay, let's say that we are here and the market broke the uptrend line, and of course we don't have a crystal ball, right? We don't have the crystal ball, and from the daily chart we are here right now and we want to trade based on what we know. We know what? Market structure, uptrend, downtrend, and the counter trend line, the three trend lines, right? So if this is the market right here and the market is falling, right? And the market is falling and we are going to wait until it makes a low. Okay, so this is the low, right? Okay, this is the low right here. I'm going to, this is the low right here. Okay, come on. Okay, this is the low. So what do you want? Well, you want to find levels of resistance, right? And let's use the technique of the horizontal line. So this is a level of resistance, this is a level of resistance. No, maybe not the best. We're going to go with a set of stairs because it's much easier. So from the left you go up and try to find the low. So here is the low, right? And you go up and try to find the low, right? And you go up and you say, oh, this is the low, right? Now, as we are talking, as we said, most of the books and theory that teach us how to find support and resistance are going to tell you, oh, just take a look or find the previous level of support and or resistance from the trend that you are trading. Okay? Hello Miguel, resistance and support that extend more previously are stronger. Let me reread, Miguel. Resistance and support that extend more previously are stronger. Well, Miguel, I don't understand your question. What do you mean that extend more previously? Do you mean that resistance as the most recent support and resistance are stronger? Do you mean that most recent support and resistance are stronger? Because I don't understand what do you mean by support that extend more previously. So okay, in the meantime we are chatting, so go find, everybody go find all levels even from the previous. I'm going to compress the chart. Okay, and in this example we are here. We're going to draw this pink or orange line, vertical line, or okay, that go further in time before. No sir, no sir. No, Miguel, the answer is no. No, the forex market doesn't work that way. Maybe it goes with stocks, but the forex market doesn't obey this rule. You know, that all the resistance are stronger. But maybe you want to ask Miguel that support and resistance from the higher time frame that are stronger. Then the answer would be yes. But it's not a question about time, it's a question about time frame. This is logical, right? Because if the higher time frame controls the smaller time frame, then the weekly resistance and support are stronger than daily 2 hours, 1 hour, right? Okay, so set of stairs, we want to find low, so go down, low, go down, low, go down, low, down, low, right? And you go further in time. Okay, further in time you have more lows. Okay, we've talked about hidden levels of support and resistance, and so okay, you have here, right? And what happened, everybody? As you can see, so the market broke the, let's circle this in black. So the market broke the uptrend line, start reversing, and as you can see here, this circle, okay, and this arrow. So we had a very shallow retracement, but the market, let's see where to what resistance did the market respond. So let's circle this in 10. Okay, so if we are going to back in time, let's see, compress the chart, and as you can see you had two lows. So this theory, everybody, let me compress the chart, this theory, right, that you shouldn't go back in time and look for resistance levels from an uptrend, in practice in the live market doesn't work. Okay, you can send me a professor from college, I'm going to tell him, oh, but in my book, I don't care, in the live market it doesn't work. Okay, so this is why it's important, everybody, that you are clear with the levels of support and resistance. Okay, so resistance, and come on, we're going to delete this. Okay, delete. This is the live market. This is what I failed to say, also present in previous time frame. Yes, Miguel, the bigger the time frame, the stronger the levels of support and resistance, and don't forget the pivot points. Okay, so the market fall and fall again, and let's see. Okay, right now the market did okay, a low. So where are, I'm going to clean up a little bit the chart. Okay, so now we go with the horizontal line, no problem. So this is one level of resistance, this is the second level of resistance, this is the third level of resistance, and let's see what is going to happen. Right, the market broke the first level of resistance, went to the second level of resistance, fall back down, right, back down, moved sideways, right, and sideways movement, and fall. Okay, fall. So let's take this channel, right here. Okay, let's take this channel right here. So the reaction for this, some kind of downtrend, okay, the reaction, the market reacted, come on, the market reacted up here, right, the circle. Okay, now as you can see, we don't have any levels of resistance in our downtrend, right, because this is theory, right? We have a downtrend and a downtrend line, and we said that the market is going to react to some level of resistance, which is okay, but sometimes the levels of resistance are found, the market is going to find levels of resistance from the previous trend. Okay, so we're going to draw a horizontal line, orange, and let's see back in time to what resistance level, okay, did the market respond. So let's go back in time, and again, see how curious the market behaves. You have here resistance, this is a low. You have two resistance right now, two resistance, 1 and 2. So if I compress the chart, compress the chart even more. Okay, if I compress the chart and clean up a little bit, clean up the theory, clean up. Okay, what can you see? You can see that the market reacted right in here, red arrow. The market reacted to this resistance from the previous uptrend. Okay, and it goes both ways, also for support. Okay, so, and we are here right now. Let's zoom into the chart. Okay, we are here right now. We are going to clean up the chart. Clean up. Come on. Remove and remove and remove and remove and remove. Okay, so we are here right now. This is the live market, and let's see what's happening. We have a low and the market starts to go back up. It's retracing. So this is the most recent low. Let's draw levels of resistance. So 1 on the high, 2, 3, 4, 5, and don't forget the hidden levels of resistance. Here it's a hidden level of resistance. Okay, hidden level of resistance in here. And let's see, this would be a nice trade, right? We're going to draw the counter trend line. We don't know nothing about the market, we just know counter trend lines, right? Okay, so this is the counter trend line, and the market, this level here, the market reacted in here to this level of resistance right here. Okay, nothing too difficult, nothing special, right? Quite easy to understand. So let's see how it's going to go. Okay, the market went down and broke our level of resistance. So this would be a loss for us, right? We lost this trade. Okay, and when the market breaks one level of resistance, generally it goes until the next level of resistance. Okay, so this is the uptrend line, the counter trend line. Now you have another counter trend line. Okay, so let's wait. We are here, the market is moving up. This is the counter trend line, the market's moving up, and let's see, the market didn't break our counter trend line, didn't break, moving up, right? The market didn't break our counter trend line, moving up, and moving up, and right now we have finally the counter trend line break. Okay, we're going to clean up a little bit the chart. Clean up. Okay, now this is the level of resistance that the market reacted. Okay, and we have a counter trend line break in here. Okay, before you enter this trade, everybody, you should check if the market reacted to some level of resistance. So this is a trading clue, right? So we are going to see back in time, and we are going with the 10. See, and the market reacted to this level of resistance from the previous uptrend. Let's compress the chart a little bit. Okay, so clean up, come on. Okay, so this quadrant and this circle, right, the market reacted to this level of resistance in here. Okay, So let's color code this in black. Okay, there you go. See everybody? Where the market reacted, it was here also the red arrow. The market reacted to this level of resistance from the previous uptrend. Okay, and of course this part, yes, you're right, this part is also part of the downtrend right now. Okay, what is the point, everybody? What I'm trying to teach you today, that it's not enough if you are going to use, and I hope you do, if you are going to use support and resistance levels for your entries, it's critical that you don't just find the most recent levels of resistance. Okay, don't just bother with this. This is not enough. Okay, because the beginner trader is going to learn and is going, oh, but this is a lot of work, and is going to do what? Oh, but I'm going to find just levels of resistance from the downtrend because I'm trading the downtrend. Okay, as you can see from this red arrow, this is not enough, right? You should address more levels of support and resistance. Okay, this is how predictable this market is, right? And okay, we are here right now. Let's zoom into the chart. Let's clean up a little bit. Clean up, clean up, clean up, right? Clean up. We are here right now, and the market broke our uptrend line, the counter trend line, and let's see. Let's wait until the market starts to retrace. Okay, so we are here right now. We are here right now. Question for you, everybody. What do you think? Should you check? Should you project? This is predictable. Should you project only the resistance from the counter trend line break on the right, or should you project and go find resistance levels from the counter trend line break to the left? What do you think? Where the odds are going to be in your favor? What do you think? It's the right quadrant, or I'm going to check the resistance only from the downtrend because I'm trading the downtrend. The uptrend doesn't matter. It matters. Everything matters. Okay? But don't take my word for granted. Let's see. So I'm going to do both. So level of resistance, resistance, not resistance, not resistance, resistance, resistance. Okay? But I'm going also on the left side with the most recent uptrend. So resistance, 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 3 levels, resistance and down. Okay, and I'm going to color code this in green because it was an uptrend. Okay, let's see the difference between a trader who just checks a resistance from the most current trend and a trader who does a little bit more of homework and checks both the actual uptrend and the actual downtrend. So let's see what is going to happen. Okay, the market reacted. Okay, score point number 1. Okay, the market reacted. Okay, let me see. The market reacted here. Okay, this is not a low. Sorry, I need to be fair, right? So this is a low. This is not a low. This is not a low. This is not a low. This is here. This is a low. So the first level of resistance is here. So the market in here, quadrant and down arrow, the market in here reacted to level of resistance from the left side. Come on. Okay, so the market reacted in here from this side, found resistance in here. Okay, passion, why? because on the right side this is not a low, everybody. Okay, I'm going to show you this circle here. This white candle, it's not a low. This white candle in here, it's not a low. What is a low? A low is a center candle with two candles on the left and two candles on the right with higher low values. And this white candle, it's not a low. So this is not a level of resistance. Okay? So the trader number one, who thinks that only the current trend matters, okay, couldn't project this retracement. The trader number two, who did a little bit more of homework, could project, right? So let's see, let's move on. The market fell down, we're going to wait. Okay, we have a new low. We have a new low in here. So where are the levels of resistance? Let's clean up the chart a little bit. Clean up. Okay, most recent trend. This is the first level of resistance. This is not. Okay, so this is the first level of resistance. Let's circle this in red. And this is the second level of resistance, the red line, from the most recent downtrend. Okay, now from the left side, from the previous, we're going to circle this in green. From the previous uptrend, you have more. You have one here. Okay, you have down here one more. So let's see what the market is going to do. The market is going to retrace. See how it's retracing the market? Let's zoom in. The market is retracing, going up. We are going to use a counter trend line break to enter the trade. Okay, going up again, going up. Furthermore, touch the level of resistance. Okay, we need to adjust our trend line and reversed. Okay, now yes, the market reacted to this level of resistance in here, red arrow from the most recent trend. That's okay. Okay, but I'm telling you, everybody, don't check just the most recent trend, check the one previous also. Believe it or not, we have seen the market react to levels from decades ago. Believe it or not, I'm telling you, from the weekly time frame. We have traders trading from the weekly time frame, and we saw levels from the daily chart that are going back to decades. Okay, this means what? This means that if we are in 2019, the level of resistance where the market decides to react for any reason, you know, market psychology, was dated in 2009, one decade ago. Oh, Passion, I don't believe you. You, no problem. No problem. You don't need to believe me. Okay? So the market is falling down. Right, this was a nice trade. Okay, so the market right now, we're going to leave the red and the green colors, which are the levels of resistance. Okay, we're going to wait for another. Oh, and the market reacted here, see, again to the level of resistance from the most recent. So the red, right? It went sideways for just for a little bit. Okay, and fell further down. Okay, so we're going to wait for the next opportunity. The market found a low quadrant, which is here. Okay, so where are the levels of support and resistance? Okay, so resistance is here, most recent resistance. Let's circle this in red. Resistance and resistance and resistance. So if you're a beginner trader, let's talk about trading a little bit. If you're a beginner trader and this is your chart, you can project and you can put an alarm, or you can put a sell limit order for your entries if you want, okay? But the main topic about support and resistance with the counter trend lines is that you can project the potential reversal, okay? This is the topic. You should learn how to project the potential reversal. So if this is the live market right now, I'm going to remove, okay, this is the live market, and you have a candle that is signaling a potential high, the blue candle here, the blue candle here, orange arrow, the blue candle here, orange arrow, is signaling you the potential high, right? And you have your counter trend line in black, and you see that this blue candle, you know, the so-called shooting star, is reversing, or it's reacting at a level, at the red level, which indicates resistance, right? So this is a trade I would easily, if the market confirms my counter trend line break, this is a trade I would easily enter, okay? Why? Because we are in a downtrend, we are trading resistance, everything is in place, so I would enter. Let's see how it would go, okay? And yes, we have a counter trend line break, and let's see, the market fall, okay, resistance, so falling, okay, going up maybe, and okay, so this would be a winner. And let's wait, we have a new low right here, okay, so this is a new low, right? And where are the previous levels of resistance? So this one is resistance, the red line, this one is resistance, okay, this one is resistance, okay? So again, I'm going to draw the counter trend line with the black line down here, okay? And I know I can project that the market, if it's going to retrace enough, is going to react or at resistance level number 1 or resistance level number 2 and 3, right? Or resistance level number 4. And as a beginner trader, you should be aware that you are going to have losing trades, everybody. You are going to have. Why is that? Because this is so important. Don't be so naive and think that you are going to win 100% of the time, because you are not. Okay? Nobody has 100% winners, not even Warren Buffett, Donald Trump, or George Soros. Okay? So if this is structure, okay, this is structure, and right now the market is retracing up, and you have a counter trend line break. Let's color code this in red. This is so important that you understand. Why? Because you shouldn't get afraid. That's why. You shouldn't get afraid if you lose on a trade. Okay? Because what is going to happen? You are going to see this counter trend line break. Okay? And you can even see this counter trend line break with the level of resistance. Okay? So this market reacted to this level of resistance in here. Okay? So you have all the reasons. You say, oh, I'm going to enter short, which is okay. I would do too. I would enter this trade with no problem, but bear in mind that sometimes you, not just you, sometimes we are going to lose, right? Why is that? Because if you look at structure, I'm going to color code this in blue right now. If you look at structure, give me a, okay, so this is structure. Let's color code this in blue. Okay, if this is structure and quadrant, this is the structure high, the market is making lower highs, and you are entering here. If I'm going too fast, tell me passion, slow down. Okay, so the structure is down. This is the most recent high, blue arrow. This is the most recent high. Okay, and we are entering here, which is okay. We have all the reasons. Counter, trend line break, check. High, check. Market reacting at resistance, check. Okay, we have all the reasons to enter this trade, but sometimes we are going to lose. Why is that? Well, because the market has space to go up until here, right? This is our risk level. Okay, let's color code this in what color? Okay, green, 10, whatever. Okay, so sometimes we are going to lose because the market is going to, yes, break the counter trend line, but this was just a retracement and the market is going to move up a little further. Okay, this is normal market behavior, everybody. In the forex market, this is normal market behavior. Okay, it's critical for you to understand, for you not to get afraid. Okay, because many times as a beginner trader you are going to lose on the trade, and when the next opportunity is going to present itself, we are going to adjust the counter trend line, and the next opportunity is going to present itself, you are going to be afraid, okay, to enter this next trade, especially if you lose 1, 2, 3 times on the smaller time frame. You know, you entered short one time, you lost. You entered short for the second time, you lost. You entered short for the third time and you lost. And when finally the opportunity that is going to make back all your losers, it's showing to you, you get what? Scared, right? Oh, you are thinking, oh, I'm not going to play this game anymore. Now I'm not going to enter because I don't want to lose the next trade. Oh, I'm going to check another currency pair, NZD-CAD is too difficult to trade, right? This is why you should address, okay, before you enter a trade, check structure. Okay, check structure. Sometimes, okay, let's talk about trading a little bit. Sometimes the market retraces only until here and goes down. Sometimes the market retraces further back in the structure and goes down. Sometimes the market retraces even deeper and goes down, right? So you should know this, and you know, sometimes the retracement is shallow, sometimes the retracement is halfway through structure, right? But sometimes the market, for it doesn't matter the reason, sometimes the market loves going into deeper retracement before it goes down. And if you are going to lose, well, there is nothing wrong. Why? Because the structure is, okay, let's color code this in black. The structure is still down. You just need to be aware that the market is retracing into deeper level, right? Okay, this is so important to know where the structure is. Okay, so we are going to lose 1, 2, 3, doesn't matter. We are just stick with the rules, right? This is why in the beginning of every webinar, you know, we are telling you, you need to have a set of rules, you know, manage your emotions, right? Yes, of course, you shouldn't get afraid. But it's everybody, this is totally normal for the beginner trader, you know. I was the same. I'm telling you, I lost 3 trades in a row, and finally when the 4th trade came along, sorry my English, came along, I was thinking, oh no baby, no, you are not getting me anymore. Okay, I didn't took the opportunity, and what happened? Well, the market just fall. If I would have the courage and understanding, which I had, but I didn't believe in the concepts, everybody, you know, I said, well, these concepts maybe work now and then, but they are not 100%. Structure concepts, you know, trading is not 100%, but how the structure works and the rules are 100%, are non-negotiable rules. Okay, so you should be aware, where are you entering the trade inside the structure? What's the time? We have 15 more minutes. Okay, let's check EuroCAD. Okay, look at this structure, everybody. EuroCAD daily chart. I want to show you, I want you to see something. Let's wait for the software. Come on. Okay, so this was the downtrend. Okay, so everybody, I want you to see this. This is the long-term uptrend line of the uptrend. This is EuroCAD daily chart. Okay, and talking about structure, this is structure. We have talked about this in January when we were addressing structure. I don't know if it was like this or maybe even further, like this. Yes. Okay, so this was structure. Okay, and as you can see, well, this is the uptrend. Okay, but it goes in the same way. So my point is this: if you were to trade this downtrend, okay, don't you think that resistance levels from the previous uptrend were important for your entries, right? Don't you think that also the previous trend has meaning to you? Okay, we can check. Okay, so let's color code this in 10 color. Okay, and let's see where the market responds. So this was the first one. Okay, the second one, the third one, the fourth. This one didn't work, so the sixth. Okay, and sixth, seventh, right? And which one? If you want, not a retracement, but okay, this one, right? And if you check the left side of the quadrant, the left side, so responded here. Let's color code this quadrant in red. Okay, the market reacted here, and not in here, but yes, reacted here, and also, of course, yes, also here, correct. But I'm interested in these ones also on the left side. Okay, I want you to believe, everybody, you can reject, no problem, but I want you to believe that all levels of support and resistance are important for your projection. Oh, Passion, but there is too much lines. Yeah, I know. But it's better to have more lines and predict the reversal than to have a few lines and miss a reversal. Wouldn't you agree? Wouldn't you agree, everybody? It's better to have more lines and predict the reversal than to have a fewer lines and miss the reversal. Right? Okay, so this is EuroCAD daily chart. Of course, what Miguel asked, this is the weekly chart right now. Let's see, let's wait. Okay, this is the weekly chart. Okay, now why I'm showing you the weekly chart? If the daily chart is your trading time frame, your confirmation time frame is going to be the weekly chart, right? And this is the weekly chart, and the market is retracing right now. Okay, let's find levels of what in an uptrend. It's the same analogy, everybody. It goes the same from an uptrend and downtrend, but we are in EuroCAD right now, and Miguel asked about the higher time frame. So this level here of support, right, is much stronger than other levels of support from the daily chart. Why? Because the higher time frame controls the smaller time frame, and right now this is the live market. We are here right now. Come on, we are here right now, right? We had a news announcement from Canada this morning or night or evening, I don't know where you live, and the news was positive for CAD. Okay, it was positive news from Canada. Okay, why do you think, even though the news was positive, why do you think why the market is most likely, no guarantees, most likely going to go up? Most likely. Okay, the webinars are not investment or trading advice, but if, I don't know, I don't have the crystal ball, but if the market goes up from the daily time frame, which is my trading time frame, I can see support level in here from the weekly, support level in here from the weekly, okay, support level in here from the weekly. You have even more, okay, support level in here, right, support level in here. Okay, so if the market is going, oh, but the news was good for CAD, the EuroCAD should fall. Why the CAD is rallying up back up if the news was good for Canada? Well, look at the levels of support, right? And you can see also here the market was falling down until here. Tried to break, didn't manage, tried to break, didn't manage, tried to break, didn't manage, and went back up again. Okay, this is what is so-called strong support level, where the bulls are fighting. You know, the bulls are fighting the bears. There is a fight out there, but this is a strong level of support, right? Past resistance becoming future support. Right? Why? Because this was a level of resistance. So this was a resistance, right? And the market is moving up and down, up and down. It was a resistance again. Oh, come on. Right? This was resistance again, and finally the market broke resistance, and then past resistance become future support. Okay, homework, everybody. Okay, not just for the next week, but all your traders' life. Okay, homework. homework. Okay, if you're going to use support and resistance and pivot points for your entries, have all levels of support slash resistance slash pivot points on monthly, weekly and daily, and the 2 or 4 hours, 2 hours, 4 hours. Okay, this is the homework, not for the next week because it's Friday, but from now on you can reject, no problem. You can reject trading with the support and resistance levels, no problem. As I said, there is no right or wrong. But if you are going to use, have all levels of support and resistance and pivot points on monthly, weekly, daily, 2 hour, 4 hours. So what does this mean? This means that the 4 hour chart, just an example, is going to show support slash resistance slash pivot point levels from all the higher time frames. Okay, this is the homework. So, and from all the higher time frame, not just the weekly and the monthly and the daily, but the 4 hour chart is just an example. It's going to show support, resistance and pivot point levels from all the time frames. Pivot point, come on, pivot point here. Okay, so let me find one. I believe it's AUD USD. This is the homework. If you are going to use the support and resistance levels for your entries, okay, I hope you do, because we showed you this week there are trades that you are not going to win because your take profit level is above, far more above support and resistance and pivot point levels. Okay, this is just an example, everybody, but as you can see, this is AUD USD monthly chart, and you have support, resistance and pivot points from the monthly, and you have exactly the same and more, even more support and resistance levels on the weekly chart. I'm showing you are exactly the same. I mean, the pivot points are from the monthly, but support and resistance levels are different because there are more. Okay, and if you go on the daily, look at this chart. See, you have the same levels from the monthly and weekly. See, you have big support, resistance, pivot point, big support, resistance, pivot point. Okay, big support and resistance on the daily. And 4 hours, let's see if I do have, look, 4 hour also. See, on the 4 hour chart you have all the support and resistance levels and pivot points from the weekly chart and everything. So see, pivot point. Okay, everybody, happy weekend. Go rest. See you back on Monday. Do your homework, everybody. Until Monday, stay strong. Don't trade with passion because it's Friday. So stay strong, relax with passion, and see you back on Monday, everybody. Stay safe. Have a nice weekend. This is FXPassion signing off.